Hello and welcome to Spare Change Podcast. Today I have on Rebecca Richardson. Rebecca, I actually started following you on LinkedIn and I started seeing a lot of your content about mortgages. And then I looked into, some of the things you've been doing. And over the course of like years and years and years, you've been doing mortgage banking and teaching people what they don't already know about, mortgages and how they can better be prepared for first time home ownership or even down the road learning things they didn't already know about home ownership
Yeah,
mortgages. So feel free to kind of tell the audience something they might not know about you and then how you ended up in the personal finance space and like mortgage lending and all of the things that you do currently.
sure. So I think one thing that people would not do not know about me is I do not have a degree in finance. So I have done this for over 20 years, but my degree is actually in biology, which kind of set me on this path of down the financial planning route because I thought I wanted to be a physical therapist. I'd been through physical therapy as an athlete. It was very beneficial for me. I love the science. But then when I talked my way into an internship from the practitioner side, it wasn't what I thought. It was a lot more paperwork, a lot more insurance, all of those kind of things, and not as much of the science that I really loved. And so I kind of had a moment of crisis of, oh my gosh, what am I going to do with my life now? And I had actually read some financial planning books. And really, that was the first exposure I had to the concept of financial planning, which, kind of sounds remedial, but I mean, again, you don't know what you don't know. And I, that really interested me from the standpoint of you can take these small steps that have a big impact later on. So I similarly talked my way into an office with a financial planner and just said, "Hey, I'll empty your trash can. I'll put files on labels. Just let me learn." And that's when it really kind of clicked for me because I wound up working for him for 2 years. And during my senior year, I was working for him 30 hours a week. And so I was fully immersed in that. After graduation, I then moved with my then fiance to Clarksville, Tennessee. So we were right outside of Fort Campbell, Kentucky, which is a little bit of a different community. And just from the standpoint, as far as it was a different community and a different life for me, because it's not that I could establish a financial planning business if I was going to be moving every 3 years. So we wound up getting a house because when we moved there, the rentals were a little scary and wanted to, find somewhere that could feel like home. So wound up getting a VA loan and closed on it. And our realtor came to check on us and said, "How's everything going with the house?" And great, love the house. It's fantastic. But you have to get a house. I need you to help me get a job. So he said, "I can introduce you to this mortgage company. You could be a processor." Talked my way into an interview there and said, "I don't know what a processor is, but if you'll tell me what it is, I'll work hard and make you money." And the owner of the company said, "You want a job that is not available and you don't know what you're doing?" Yes, that sounds great. And then he said, "Have you thought about being an originator?" Okay, well, what is that and what does it entail? So, like a lot of people, I fell backwards into the mortgage industry. I don't think most little girls or little guys, think that they're necessarily going to grow up and be a mortgage banker. It does not sound exciting to anybody, and I get that. But I personally love it because it's everything, every day, literally, there is a new challenge, even after doing it all of these years. And it's kind of like solving a Rubik's Cube slash algebra equation at the same time, but doing so in a way that I get to hear people's stories. I love storytelling and just knowing where somebody's coming from and in whatever way I can, helping to solve that puzzle for them. And the challenge of there's always some quirk, there's always some new thing to learn, keeps me really engaged. And the fact that it's very fast paced is great because I get to see people in their homes within 30 days versus waiting 30 years to kind of hit that magic retirement number. So I still love it. I mean, I really, really do.
Yeah, and I think just from an outside perspective, like dealing with home ownership, like very young, I was kind of in a good position because my family had been like homeowners for the majority of my life. So Growing up, I lived in a home that was like right across the street from an elementary school. And
Mhm.
my grandmother, she had a home on the river, and, another home that's right near downtown Gainesville, Florida. Um, and my uncle had his own home, and he ran a mobile home company. So, like, home ownership wasn't out of the blue, like something that I had no clue on, but it definitely was an experience that I wasn't prepared to do myself, when
Right.
it came to that moment for me. So very similar to the situation you described. I was in a military town, Jacksonville, North Carolina, and I was getting out of the military, but I didn't want to move back to Florida and kind of start over everything there. So we ended up buying a home out here because my wife had a stable job and I had a job outside the military that I was still working when I got out.
Yeah.
So in 2021, we bought our house, and instead of going the traditional military route, get a VA loan and then set yourself up with no down payment, XYZ. That wasn't the case for me. I didn't get VA loan approval before purchasing and closing on the home. So I had a lot of lessons to learn. Like, what did I do wrong to not get approved for a VA loan?
Mhm.
What other options would have been available if I didn't, fall in love with the backyard of the first house I got toured on? Or
Right.
uh,
Right.
there's a lot of learning to do when it comes to homes and mortgages. A fixed rate mortgage doesn't mean that your payment won't go up. That's something I learned recently when the taxes went up for
Right.
me. Um, so definitely, I enjoy learning more through your content. And when I discovered the things that you had been doing, it brought a new light to what mortgage lending can really turn out to be, and like how positive of a situation it can be when you have a good relationship with someone who has knowledge and has experience in the mortgage like field. um so I definitely wanted to bring some of that knowledge to my audience, and kind of like listen to some of the stories you had about your experience with mortgages, and then your experience with people who are having that first time home ownership, or even just specific issues that you wouldn't think about with mortgages. So any stories that you have, I'm open to hear and discuss on like what could have been done right versus what are some things that are just unavoidable that people don't know about yet.
Oh, for sure. I mean, a ton. So kind of similar to you, my dad was a real estate attorney, so I did grow up around, real estate and homes and things like that. But it always was kind of this thing that like it felt out of reach because I just knew that it was complex, right? And I just knew that like people did this thing, but and I think still very much, even though we have access to so much more information that's at our fingertips. I mean, we can get very customized, to our scenario. But it was really hard for me to kind of conceptualize like how do I get from people say that I can get a house to I'm a homeowner, right? I mean, even to the point of being there in Clarksville and people like, oh yeah, you can get 100%, VA loan. I'm like, I don't know what that means, but I know that that sounds like a scam, right? Like, because of course you need money to buy a house, So I think that's where a lot of people start is particularly for people who are buying their first homes now. Sorry, my dog is absolutely going to town on a bone. But for people who are buying their first home now, a lot of them either, you know, maybe they were they saw their parents go through 2008 or those kind of situations, right? And so not only is it a scenario where it's complex and it's hard to kind of figure out how this applies to me, like how does this whole big topic apply to me, but then also with a very, I think, healthy dose of skepticism, because it's like I don't want somebody to take advantage of me, right? And that's where I think a lot of us, kind of the mindset that a lot of us go into something when it's a complex topic is like, I'm good. I'll do it on my own, right? I'll Google, I'll, search YouTube, I'll search TikTok, whatever the case may be, but I'll find the information because I can trust what I can bet. Versus, I think sometimes with different generations, they'd be like, oh, well, you're the professional, so I'll just trust what you say. It's like, it's very much kind of the trust but verify. And I think where things get though now is, although buyers are a lot more educated on the process and credit and know terms like debt to income ratio and those kind of things, it is still difficult to disseminate all that down to how does it apply to me, right? Like, you know, would a VA loan have been the best option? Would a conventional still have been the best option? All of that comes down to very much being one-to-one consultative, conversations, versus I think sometimes approaching a loan officer and saying, this is the loan type that I want, and this is how much money I have. Because a lot of times that's what people will say, is I think that they feel pressure of like, well, I know what my budget is, I know what my payment is, but I don't know what that means that I qualify for, and I'm not quite sure my down payment. And I always sense kind of a lot of almost like apologetic, that they don't, they don't just say like, this is what I want and this is what I need you to do for me. Ultimately, that's what my job is. A good loan officer, loan originator, whatever title they have, but a good loan officer is going to say, all right, let me get all of those pieces, right? And that's why I kind of equate it to a Rubik's Cube, is give me all the story, give me all the pieces all mixed up, and your preferences, and your data. And it's my job to have that come together and have that be basically, here's the structure, here's the strategy that we're going to use to get you as close to your goal as possible for as least money as possible. And that's, like I said, that's really kind of what happens, on a day-to-day basis. I think some of the biggest things, though, that I feel like people, when they're coming into homeownership for the first time, that are very much widespread, myths, that a lot of people believe in, are a couple of things. One is that you need 20% down to buy a house, right? Certainly don't. I know we've talked about VA, it's a 100% loan, but even, yes, there are FHA loans with 3.5% down, or USDA, which is for rural areas, that's also a zero down loan. But even with conventional loans, right? Because people kind of hold conventional up here as, the best loan type, which I think can be debatable, depending on the situation. But even with conventional loans, if you're a first time home buyer, you only have to put 3% down. And that's very common. Whereas I think a lot of times in the media, or just, kind of general perception, if I don't put 20% down, if I have to use PMI or mortgage insurance, it's almost like I'm not buying a house in a successful way. And that's where I think that sometimes people kind of get hung up on that there's a right way to buy a house. The right way is what's right for that person, based off of their needs, based off of their preferences, and based off of where they are in life. I would almost always rather see a buyer, particularly a first-time home buyer, put less down and have more set aside in their emergency fund and their reserves. Or even if that's well stocked, but they can use that money elsewhere to grow it in the market or what else. It doesn't a lot of times mathematically make sense to kind of dump everything into a house, because it's not going to have that huge impact on your payment. Which is kind of the second thing, which is, a lot of times I tell people, hey, for every 10,000 you have in loan amount, that's typically only going to impact your payment about $50 to $60 a month. And that's where I think sometimes folks will, maybe they don't even reach out to a lender yet, because they're like, I got to get an extra 5,000. I got to get an extra 10,000, because I want to put that on the house. And in the meantime, rates are going up and down and home values are going up. And, it a lot of times I think can feel a little defeating, when you get there and you have that conversation. It's like, okay, and I've got an extra 10,000 to put down. And I'm like, awesome, you're saving, $57 a month. And you're like, yeah, I can easily spend that at the grocery store when I go in hungry, right? And think that lends itself to, the earlier that you can talk with the lender, the better, right? Because it is not meant for somebody to come with their full mortgage plan to us and just be order takers, because then we wouldn't have a whole lot of value, right? AI could do that. Where the value comes in is starting early to say, this is where I want to be. And I know I'm not there, or maybe I am there. I need you to confirm it for me, but this is where I want to be. What steps do I need to take now, 6 months, 9 months, 12 months, maybe, to make sure that I'm in the best position possible when it works for me to buy, right? So that's why I sometimes tell people, I'm like, look, when you renew, the lease, go ahead, and if you think that you want to buy a home in the next year or so, go ahead and at least have a 15-minute call, a short conversation with a lender, and just say, this is kind of what I'm thinking. This is how my income works. This is, I think, where my credit score is, and just kind of calibrate and make sure that you're on the right path, because it doesn't cost you anything. It shouldn't cost you anything. And all it does is, again, just make sure that you're getting really dialed in professional but personalized advice versus trying to disseminate all the videos and content and blogs and articles and all of those things and see how it applies to your situation.
Yeah, I think one of the great things that you highlighted is just um a lot of times we get caught up in um just a wide span of these ideas that get pushed on us. So like for instance, a lot of people in the military think they can only use their VA loan once, and that's something that you highlighted that's just not true. Um
Right.
but there's so many things that people are either misinformed on or just don't know, and the knowledge gap is actually, I think, is becoming less of a problem over time, um primarily due to technology, because there's so much available to people up front, and it's only becoming more available. But also, we do have to be careful about misinformation. That's something I talk about a lot, where you can be deliberately or even unintentionally misinformed about a lot of things in regards to your personal finances. Um, and one of the big things for people who are, in these situations where they either have bad credit or they have a lot of existing debt, that goes against their income when they come to that first time home ownership situation. Maybe there is an option that they just haven't seen or haven't really come across yet, and a lot of people get discouraged and they end up almost financially handicapping themselves based on either fear or a lack of knowledge. And then there's a lot that goes into it, even like someone's upbringing and their mental health and like their mindset around home ownership. So like, you brought up 2008 and the collapse. There's a lot to be said for mistrust of financial institutions, especially now seeing things like all these regional bank collapses. I don't know if you've had any specific questions or concerns from clients or people trying to find out, more about the regulation of the bank that they're trying to get
Mhm.
lending from. But it's bound to be a concern at some point. And I think the more negative financial news that people might be seeing might even be discouraging them from buying their first home, or even from considering home ownership as a possibility, because either they mistrust financial institutions and financial professionals, or they just don't think that it's really even possible. Especially, I know a lot of people, when I was buying my first home, the experience was like, well, good luck, because you're going to get in a bidding war. Um,
Right.
when in reality, the first offer that we put in was the offer that got accepted, and that was just the situation for us. And I know my situation is not everyone else's, but very often you can be told things that either aren't true or are intentionally misleading. So
Right.
it's definitely a huge concern, especially now, because even you bringing up AI, there's a lot of uh is this person I'm talking to about my mortgage or my home that I'm trying to close on, are they even real? So that's
Yeah, I mean,
new concern.
I think that that's a big part of it. Is it's we're fortunate to have all this information, right? But it can also feel like an absolute assault of information, because it's sometimes too much, right? And a lot of times that's kind of what I see, or those are a lot of the initial conversations that I have with clients is, hey, I heard this, or hey, my friend did this. And that's natural, right? When we're going through a new, a new experience, we're going to say, if somebody has done it, like they're a new parent and you're pregnant, or, they bought a home and you haven't bought a home, or whatever the case may be, you're going to say, hey, well, what was it like for you? Right. And then we kind of like shop that opinion out to people that we know, and we're doing research and all of that. And that's where you kind of have three categories of stuff. You've got what is the general process like? What is that person's individual experience? And then what's misinformation? Because the general process is going to be stuff like, yes, it's a good idea to get pre-approved well in advance of going to buy a home, because I always want first-time home buyers to understand that getting a home is not like buying a car, because a lot of times before we bought a home, the most, high ticket thing that we've ever financed is a car. And you really don't figure out the money until you figure out what you want to buy. With a home, it has to really work, in the reverse. You've got to figure out your money first, and then that starts your search. So one of those things is, like I said, get really pre-approved before you're starting to home search, and certainly before you fall in love with a home, because a lot of times if you wait until you find the home and then you're trying to rush that pre-approval, either one, you're not you're not kind of creating the mental space needed to evaluate, hey, is this person serving me well? Are they answering my calls? Are they explaining things to me? Or what does this fee mean? Or just taking time to basically learn a whole new subject. Um, and also that kind of puts you in the position of sometimes being taken advantage of, because you're like, my eyes on the prize, which is the house. And yes, this mortgage is in the way, and I don't really care about that because I want to get to what I want. Um, so that's the whole purpose really behind starting early. And then individual experiences come in where it comes down to not even just loan type, but there's individual file details, right? Our income might be structured different. Our credit scores might be different. We might have different access to savings that we've accumulated, or gift funds from family. And all of that variance that makes personal finance personal means that my loan might look different than you. And it's 1,000% true for you, what your experience was. And it's also going to be 1,000% true for me, but it's completely different. And that's where I think that sometimes people get hung up, is, you know, that kind of like what is true versus what was an individual situation. And then along those lines, you also then have the difference between guidelines and overlays. And that's what I always want people to understand is each loan program has a set base of rules. And then on top of that, you're going to have individual lenders or banks, basically whoever's giving the mortgage, you're going to have their version of that loan, right? So do they want a higher credit score? Do they want maybe a higher down payment? And that's where somebody might say, hey, I got a VA loan, but so-and-so told me that I needed a 640. And then someone else is saying, oh, well, I got mine at 570. Both of those are VA loans, but the difference is not in the way that the program works. The difference is with the lenders that they chose. So when somebody is told no, or hey, you don't qualify, my guidance always is make sure that you're asking, is that because of a guide? One, understand why they're saying you don't qualify. Because sometimes lenders don't necessarily care enough to say, kind of here's where the breakdown is and here's what you need to do. Sometimes it's just a no. So you are well within your rights to say, tell me why. And then also tell me, is that a guideline? So is that baseline rule, or is it an overlay? And that means that's your company's rule. Because if it's an overlay, it's worth talking to a different lender. If it's a guideline, then that means either you need a different loan program or might need to fix something on credit or have more time on the job or something along those lines. And then, like you said, then you have misinformation thrown in. And sometimes it's clickbait misinformation. It's making certain loan programs sound more feasible than they are, or that they're hacks, but it's really mortgage fraud. And, you want to be really careful where you're getting that information. If it sounds too good to be true, make sure that it's very well vetted out. And ideally, that loan officer, whoever's given the information, can kind of point back to the source, and it's not just what they're saying. But then sometimes it's well-meaning. Probably one of the biggest, I think, well-meaning, kind of myths out there is you can have your credit pulled as many times within 45 days as you want, and it doesn't hit your score. And that is something that the CFPB, the Consumer Financial Protection Bureau, says, and they say it right on their site. When you're having your credit pulled, you've got a 45-day window. The problem, and where that goes deeper, kind of down in expertise and information, is that for the credit models, or kind of the credit formulas that lenders use, which are FICO 2, 4, and 5, usually, um, those actual formulas essentially cap you at 2 weeks. And so neither answer is necessarily wrong, but it's when you combine them that the understanding gets mixed up, and it's given very liberally on the, the 45-day standpoint when it's really closer to the 2 weeks. So those little things, typically they're harmless. It just is just, a matter of clarification. Sometimes they can be, like I said, purposely misleading. But all of that is a lot to navigate. And that's why starting early and finding a lender that is not just there to, basically they want to pull your credit as fast as possible and figure out if they can get a paycheck out of you in the next 30 days. That's where someone, with that approach really, really is valuable. I certainly wish that I had that on my first house because I didn't. And I think that that's the reason that I try to still take this approach, because it's a big part of our financial picture. For a lot of people, it's the largest thing that they're going to spend money on, and it's their largest debt. So it's not meant to be, handled kind of haphazardly when there's so many different variables that go into making sure that somebody's, essentially getting their best option for, for their needs and goals.
Yeah. There's a lot to sort through. I'll probably have to watch this a few times just to dig out all of the separate knowledge pieces. One of the things that I saw you do, and I kind of got a little dizzy, but I watched it a few times. But it was this kind of flow chart that broke down, here's a conversation you're going to have with a lender, and here's what they're kind of directing the conversation based on. Um,
Hmm.
and the
Imagine
flow
what that
chart
looks like in
really,
my head.
it really broke it down um, visually for me. I think I'm more of a visual learner, but one of the things you talked about is like, okay, well, if this situation is a yes or no, it can really impact the way that your conversation with the lender goes. And just all the little variations can change that conversation for anyone who's approaching a loan for a home. And not to say that it's like exclusive to this kind of loan situation, but a lot of people run into, well, I don't think I can own a home because I've been told no because of my credit, and any loans that I do get approved for, the interest rate is like beyond something that I could handle in my current financial situation. And since my credit's not improving, my loans
Right.
are going to improve. So one of the things that I talk about is like the system in place with credit scores can almost be detrimental for someone who doesn't have that knowledge. Um, so if you feel like you're trapped in a system where the high interest is keeping you out of a good financial standing and you can't build your savings, but your credit score is not allowing you to have a different loan rate, and now
Hmm.
any financial situation you end up in, you feel like you can't grow and build because you're constantly having to pay more than you're bringing in.
Right.
It can be very intimidating, and just kind of wanted to highlight like there are options for people who have lower income to kind of build either their credit or their savings, and kind of I know income can be a problem too for people with lower credit because sometimes people get denied jobs off of credit. That's something that, I've
Yep.
learned over time by just talking to people who have either experienced it or have talked to, they have clients that are in that situation. There's a lot to be said for the way that the American economy works and how debt based dollars really feed off of that environment where a lot of the American economy is built on high high balance credit cards and aggressive lending strategies, and there's a lot
Right.
that can be kind of not so much a roadblock, but like there's a lot of preventative um, kind of structures in place when you're trying to buy that first home.
Yeah, you can definitely start facing some headwinds, and I think that that's one of the things I know. It's nice to say. We always say, right, we didn't get taught this in school, and it's nice to see that some school districts are starting to have more financial planning as an aspect of it. Like I said, my dad was even involved in real estate, and pretty much the kind of the guidance he gave me was, uh, don't borrow more than you can pay off. Right? There's very basic like financial plans, basically. Don't borrow more than you can pay off. Let's get you a credit card so you can get a credit score. You have to pay it every month. If you don't pay it every month, tell me, I'll pay it. And then we're going to have a conversation why you didn't pay it. And that was basically it. It wasn't like, how do you effectively budget, or how do you, so for me, debt was, kind of the scary thing, right? Like it could run away. So be careful, stay away. Um, and unless I think a lot of times you have somebody in your life, or somebody, a resource, social resource that you can trust, and is just giving you, all the value, all the details, no expectation. It's very difficult, I think, to learn personal finance, because it is so personal, because we get paid different ways, we have different priorities, like you said, even the psychology of money comes into it, your family of origin, how your family spent money, or what they deemed was a good way to spend money, or did they even talk about money. And that's why it's so much more than just math, right? Like if personal finance was just math, that's just finance, but it's personal, and that brings into all the different nuances that impact, how we spend our money, how we borrow money, what we even think is within reach. It's very much kind of a belly to belly, on the job training type topic.
Yeah, I've seen so many different like examples, both good and bad. And I've seen situations where the family splits up, there's a divorce, and now the home is being sold and assets get divided. Now that entire investment is like cut in half. One person gets
Hmm.
this side, another person gets the other. And I've also seen situations where someone really young gets either an inheritance, and they inherit property that they weren't prepared to be making payments on. Or
Hmm.
I've also seen situations where someone really young had a lot of money coming in, and they just bought their first home, like
Hmm.
straight out without a mortgage being involved. Uh,
Yeah.
it can really depend on everyone's situation, and I think we've reiterated that quite a bit. Um,
Well, I think the reason that that's one of my soapboxes is, I'm sure you get comments, on your content as well. But a lot of times people, have this priority, or kind of this hierarchy of the right way to buy a home, or even if you should buy a home, right? So there's some people that renting absolutely makes sense. Not everybody should buy, because it's not the right decision for everyone. But I think like you said, technology and social certainly give people bigger platforms. It's a little bit more attention grabbing to say this is the way and this is not, and those kind of things. And people hear those messages, and so like you said, sometimes they even just kind of disqualify themselves, because they'll say, oh, I don't fit in that box. And because I really believe in, you know financial literacy, the power particularly of home ownership to help people, grow their wealth over time. I think that that's why that's so much of my soapbox is like, look, there's so many right ways, there is not a right way. I just want people to have the right information, but not feel like that they have to fit into this one box, because a lot of us aren't going to. But it's still a valid journey. It's just making sure that you're, getting that from sources that have some of those nuances built in.
I think and this is just like anecdotal, but one of the things when I was buying my home, there's a lot that we would have questions on. When I was house hunting at first, this was like a year prior to even considering buying a home. There were a lot of very obvious and clear issues with some of the homes that we were looking at. I'm talking like foundational cracks, floor to ceiling, and what appeared to be bullet holes, but there was no real conversation on that.
Mm,
There was a lot going on, and um, some things just weren't really talked about in conversations with realtors.
Mhm.
So one thing I like to highlight is like to any of my friends that are talking about buying a home, I'm like, really be sure what you're getting into, because I was shown homes that were in process evictions, and there was like
Mhm.
a half baked tattoo studio in the garage. So like,
Right,
I
right.
don't know. There's a lot that could be, not so obvious to someone who's just like, I want to buy a home right now.
Sure.
Um,
Well, because we kind of get that, whitewashed HGTV version, right? Like, I'm going to see three homes. I'm going to put in the offer. We're going to have some tense negotiations. And right after the commercial break, I'll find out that I got it. And, real life is often not like that. I feel like even, honestly, at this point, I've owned five homes, and each home, there's been something that's been great about it. And then there's been a lesson learned. It's like, well, I mean, and that's for somebody obviously that's in the industry and exposed to a ton of, just housing scenarios. And each time I learn a lesson, or, well, I'll do that differently next time. And that's what I'm just saying is a lot of times it's just kind of experiential and on the job training a little bit.
yeah, I definitely have learned a lot uh, before owning a home about what it takes to maintain one, and owning one, some of the maintenance that I wasn't really ready for.
Yeah,
Um,
that's a good point.
I think there's a lot to experience, and there's a lot to have a love hate relationship with it, but you definitely learn as you go a lot with like home ownership, and even renting. I've seen good and bad with renting, whether that's
Hmm.
like um, rentals where there's a no pet policy, and then rentals where you can rent it and have pets, but also your pet's going to be paying extra rent, and they don't have a job,
Right.
so it's on you. Um, it's
We
it's
don't want
definitely
our dogs to be liabilities.
it's definitely interesting, and just seeing so many different stories is uh, a big part of the reason why I think your content and all of the things that you're doing bring light to those situations that people don't think about. Um,
Right.
and I mean, there's so much that we could talk about that I'm sure could be related to this one specific person, but there's a lot more general advice. But I do try and touch on all the different situations. We talked about like VA approvals,
Yeah.
people who have either a disadvantaged situation or they just don't have the knowledge to get to the table in a conversation with a lender, and then what can they do to kind of change that situation. We've talked about people who are in a relationship, and then things don't work out, and now they have to sell their first home.
Right.
How that looks for them, and what they can do to kind of retain wealth and kind of restart their situation.
Hmm.
um One thing that I would be interested in, I talked to you a little bit about it before, but HELOCs, and how
Hmm.
when you own a home, it builds equity, and you can lend from that dollar value of equity, and what that looks like.
Yeah. So, just to kind of to recap, so equity is going to be the difference between what you owe on your mortgage, if you have a mortgage, but what the difference between what you owe on your mortgage and then what your home is worth. So not necessarily what you paid for, but what it's worth right now. And that's what a lot of people are, making sure that they're taking advantage of, because we talk a lot about getting into the home, but then once you're into the home, how do you best leverage, both that debt, right? So sometimes through refinancing, how can we improve that debt? But then also through the asset, what can we do to grow the value of the home? And that difference with the equity, what do we do with that? And so a HELOC, or home equity line of credit, is a second mortgage. So it does not change anything, with that first mortgage that you have. If you've got that great, 2020 2.75 rate, it does not mess that up. But what it is it is a second mortgage that will allow you to borrow a portion of that equity. You can't borrow all of it. That's part of what led up to 2008, is people were over leveraged, but you can borrow a part of it. And it's not the most eloquent analogy, but it's basically kind of like a credit card that's attached to your house, because it's money that you can borrow, but it's not money that you've already basically taken, right? And so if you have that HELOC and it's a zero balance, you're not making any payments, and you only pay on what you borrow. And then you obviously, can then pay that back off. And so people will use that as a way to sometimes, leverage that equity, or tap into that equity to maybe buy another property, or to, finance home renovations, just all kinds of different things that, or maybe sometimes even paying off high credit card debt. So there are many ways, again, that you can leverage debt and your asset with your home in a smart way. Um, which is a deeper conversation, but it again depends on kind of your overall financial goals. But that's what a lot of people are doing right now, is making sure that while, the values are favorable, that they at least have that HELOC in case they need it. The other thing to keep in mind with HELOCs is that the rates most often are variable. So as the Fed is doing what they're doing, that minimum payment does go up and down depending on the prime rate, which is ultimately based off of what the Fed does. And that's why I always tell people, is just to be mindful of, it's not a set it and forget it. Like your first mortgages, you always want to make sure to what that minimum payment is. But that can be a really good way, that you're not taking money out of savings, or taking money out of, investments, just to tap into an asset that otherwise, you really can't realize until you sell the home.
Yeah. And I'm really glad I asked, because I mean, even learning some of the very specifics, like the fact that it's variable rate and not like fixed rate, that's important when you go into it. And I don't think that's exclusive to a home equity line of credit. There's a lot of other different lines of credit that function the same way. Uh,
Right.
for something like a home renovation, if I wanted to redo my floors, and then at the same time I'm paying it off and I'm building credit, and it can be a good situation. I do think people, of course, everybody's different situations, different amount of research you're going to have to put in to make
Right.
sure that you're not just blowing through a lot of money for something that you could have just spent uh, a little less and saved up for.
Right.
I know for me, I was considering it because I was looking at a $10,000 quote for a fence, and I didn't want to do that. So instead, my wife and I used some of my savings, and we bought all the materials for the fence instead. So we're gonna
Yeah.
DIY.
And that's why sometimes it's just sometimes you just kind of have to go through those exercises, or not, but also get the math and then say, okay, where does our priority lie? Right. So for some people, they might say, you know what, monthly cash flow is great, feel great in our jobs, but I will just personally feel better if I have more money in my savings. And yes, I can take on the payment of, doing a HELOC to pay for whatever, but I want to keep that cash set aside. And other people, they'll say, you know what, I don't want the debt, or maybe I don't feel like my budget can really handle that, but I feel more than comfortable taking this money that I've set aside and buying it cash. And that's why it's just, you sometimes really just kind of have to explore both of those options. I tell people it's kind of like comparing paint, right? Sometimes, like with a paint sample, I don't know if it's blue or if it's purple until I hold it up against like a green. And so that's why sometimes you need to be able to explore both of those options to see really which one is your best. But just at least have an awareness of what's out there, and what options you can even tap into.
For sure. I think there's so much good conversation, and we've covered a lot of different topics. One of the things that I like to do is ask, if there was one piece of advice that you had for a younger self getting into either your first home loan, or, if there's one thing you could have told yourself prior to your current knowledge, current experience, what would you kind of clue yourself into?
Figure out a budget method that works for you. Because truly understanding what money comes in, what money comes out based off of your priorities, um, then creates the space for you to set financial goals. Because, there's also not one size fits all for budgets, but once you understand essentially kind of where your money priorities are, that helps you get really laser focused on what order to do things and how to allocate those dollars versus feeling like you're just, you know, hoping for the best. And that's, I think that that's where it all really starts to me for me, is really being willing to be honest with yourself and really dig in and know where you stand with your money. So then you can figure out how to make it work for you versus feeling like you have to react to what happens to you.
Yeah, I think that's great advice. One of the things that I do for work outside of my, regular just doing night shifts is um I work to help build budgets. That we've got
Mhm.
a calculator that we kind of use for people who we work with, and it's like, there's line items for just about anything, and you can
Sure.
kind of figure out and plug and play and set a date. And
Yeah.
that's one of the key factors is there's a date and that's your goal. How much can you save by this date? And it's not as focused on, like traditional finance where it's like you can save, $20 million by the time you're 65. A lot
Right.
a lot of the younger folks don't consider, how much money am I going to have when I'm being pushed around in a wheelchair? Like that's not
Mhm.
a lot of people's focus. A lot of people want to know, you know, let's
They
set a
give you
realistic,
that next goal, right? So it's almost to kind of like gamify. It's like, can I do this? Can I, you
literally,
know,
yeah.
uh, I set the goal and it's those little, baby steps. Not to necessarily invoke Dave Ramsey, not trying to do that necessarily, but just from the standpoint of really being able to understand this is what's important to me. This is what's going to make it feel like a win for me. And like you said, being able to customize the budget. If you, love to go fishing, you need to build that into the budget. If you like to get your nails done every 3 weeks, build that into the budget. It's your money. You just need to figure out where it goes.
Absolutely. And you hit it on the head with gamified. Like there's so much like very dry finance content that exists. I
Mhm.
don't think that either one of us sit in the space of like, you know, here's this PowerPoint and 100 page of Excel sheets. Like go through it all and that's your magic answer. I don't think either one of us
Right.
have kind of set that up for our audience.
Well, if it's very restrictive, it's hard to adhere to it, right? If you constantly feel it's like it's no different than, a diet, right? If you constantly feel like you're denying yourself, human nature is like, well, treat yourself, right? And you're going to have those budget busters. So that's where I'm saying, be honest with yourself of how you spend your money, where your priorities are, and then build your budget around that versus feeling like you have to fit into this certain way, like this much of your income has to go here and this much of your income has to go there and your house payment has to be this. If you don't spend money on travel, if you're good with rice and beans and all of that, and but your home really, really matters, or you're doing it to house hack, then have a higher house payment, or that you've got a side hustle. All of that stuff has to factor in, but it just deals with, being honest with yourself and being willing to, kind of get down to the details.
Yeah, and again, I've always been on the more frugal side, but like all the things I've learned, there's different ways to tackle just about
Mhm.
anything with personal finance and whatever your situation is. There's a way to improve it, and it all just depends on what are the things that you're willing to either um add on. So like how are additional ways that I can build my wealth, build my finances up
Mhm.
to where I can meet goals, or there are things that you can take away. And like you said, sometimes it's like a diet, other times it's more like plugging in a game, doing a little bit of the math, and then
Right.
you can kind of gamble with it. But I think there's a lot of options and technology and things like this where people who have experience and knowledge in the industry can kind of definitely provide a lot of insight and tools that you can use to kind of set yourself up for a more successful path than what you might have thought you would have been on.
Yep. I think I think kind of the concept there is be willing to, be curious. There's a book that I'm reading that's fantastic. It's called Magic Words, and it talks about how just simply switching from should to could changes how we problem solve. So instead of saying, what should we do in this situation? It's what could we do? And that opens up, like you said, all the different ways that a similar, hurdle or problem or goal, can be reached or overcome. But we have to be willing to sometimes think a little bit broader, particularly if we're working with, pretty narrow, just kind of information at the time.
Absolutely. And to wrap things up, I definitely want to kind of bring a highlight onto you and kind of say, where are some of the places that people can look, find out more about what you're doing and kind of learn more from you, um, kind of
For
see
sure.
you as
So
a vantage point.
my social handle is the mortgage mentor. So you can pretty much find me on whatever your favorite, wherever your favorite sandbox is to play. And it's the dot mortgage dot mentor. So the mortgage mentor, my name's Rebecca Richardson. And I don't just recycle content against, across all the platforms. So, connect with me on Instagram or LinkedIn, Facebook, TikTok, even Reddit, so wherever you like to play, I try to put my information there so you have it when you need it.
Awesome. And again, I appreciate your time. Definitely a lot learned. Uh, and I hope to talk more soon because I mean, like I said, I've learned so much just in the short time that we've been talking. And I think that the audience is going to have a pretty good amount of listening to do and some, maybe some re-listening. I know I'm going to probably go through a few times.
Reach out anytime with questions, and I appreciate you having me.
Awesome. You have a good one.